Hey traders, it's Ninja here, and today I've got some big news for you. Our team has just upgraded the bot, and it's now the ultimate market analysis tool you can get your hands on. Let me be clear, this isn't some magical money button. You need to know how to use it, but once you do, you're guaranteed to see a boost in your performance. Here's what makes it awesome. The bot pulls real indicator data, displays the most critical ones right on your screen, and provides recommendations based on solid technical analysis principles. Now, you're not obligated to follow every suggestion, it's still the market, and it can be unpredictable, but using this bot will definitely save you time on manual analysis. Our first currency pair is showing a strong recommendation to short the Australian dollar. Let's dive into the current market situation. Over the past hour and a half, we've seen a sharp decline in the Australian dollar, likely triggered by recent news events. And if we draw a trend line, it's clear that each subsequent local high is lower than the previous one. This is effectively a confirmed downtrend. Now, let's take a look at the candlestick chart to get a different perspective on the current situation. We can see high bearish volumes here, effectively preventing the Australian dollar from rising. The bulls simply don't have enough activity to counter this. Therefore, the current downtrend is fully confirming itself. Look at the moving averages from the alligator indicator. These lines are still fanned out and pointing downward, confirming that the sellers are dominating this market. Even though we're seeing a bit of a pullback right now, these pullbacks are completely normal within a strong trend. There are often opportunities to enter or re-enter the market. Next, let's talk about the RSI. It's currently sitting below the 50 level, indicating bearish strength. Importantly, it's not oversold yet, so there's still room for the price to drop further. This gives me confidence that the sellers still have the upper hand in this market. Now, zoom in on the MACD. This is one of my favorite indicators for confirming trend direction and momentum. The MACD signal lines are still below the zero line, and while the histogram is starting to shrink, it's not showing any signs of a full reversal. That tells me the market is just taking a breather before likely continuing its downward trajectory. From a psychological perspective, this pullback is a classic move to shake out weak hands. A lot of traders might see this minor uptick and panic, thinking the trend is reversing. But seasoned traders know that these are opportunities to hold steady or add to positions. Alright, building on what we already discussed, let's take a closer look at why this trade still has a high probability of closing in profit. One thing that stands out here is how the price action is behaving around key levels. The resistance above is holding strong, which suggests that buyers are losing steam. Every time the price tries to push higher, it's met with rejection. This type of movement often signals that sellers are ready to take control again and push the price lower. These kinds of spikes happen. The market is unpredictable most of the time, and that's just part of the game. That said, the trade closed in profit, and now I suggest we switch to another currency pair. By the way, when you start using our bot, you'll get a one-time promo code to double your deposit. For example, deposit $100, and you'll get an extra $100 as a bonus. Pretty awesome, right? Don't miss out. Plus, you'll get access to our exclusive VIP chat, where I provide in-depth market analysis and professional trading signals. Let me explain why I skipped the so-called white currency pair. It's all about uncertainty. Trading that pair right now feels more like rolling the dice. You're welcome to try different time frames, but on the current 5-minute chart, this setup just doesn't work for me. This pair looks more promising. Let's switch to a 15-minute time frame to see if we have a confirmed trend. But remember folks, in practice, things can turn out quite differently. Any news event, or even a random gust of wind, can send prices in unpredictable directions. If you look at this chart, there's a clear recovery pattern after a sharp drop earlier in the session. These V-shaped recoveries are classic signals of a reversal, especially when you have strong momentum pushing the price higher, as we see here. The price is breaking out above key resistance levels, the ones where sellers were previously controlling the market. But now, buyers have stepped in big time, and that's a strong bullish signal. We've got the RSI and MACD set up here. The RSI is climbing steadily but hasn't reached the overbought zone yet, which means there's still room for the price to move upward before buyers start pulling back. Meanwhile, the MACD is showing a bullish crossover with the signal line, confirming upward momentum. Since the breakout we discussed earlier, the price hasn't shown any signs of backing down. What's really interesting here is how the market is holding above that key support level without even testing it aggressively. This kind of stability is what tells me the buyers are in complete control right now. When the price holds like this, it creates a psychological foundation for even more traders to pile in, pushing the momentum further upward. The indicators are still backing up this bullish case. The MACD histogram bars are holding strong, which means momentum hasn't faded. And the RSI? It's creeping up at a steady pace, showing controlled buying pressure rather than an overextended move. This is exactly the kind of setup that gives me confidence the price will continue upward without dramatic swings. At the same time, the situation is becoming a bit shaky, and the price might drop below our target level. In this case, I'd consider using a martingale strategy. Hedging wouldn't be the best option here, as the indicators are signaling potential growth. At the moment, there's no need for any extra action, we're just waiting. And while we wait, let me tell you about an exciting contest happening right here on this channel. You have the chance to win an amazing prize by completing just a few simple steps. Watch this video from start to finish, subscribe to this YouTube channel, give the video a thumbs up, and leave a comment related to trading. Here's the key: only viewers who watch the entire video will qualify for the contest. Each person can submit just one comment, and it must be trading related. Comments like "I want $1,000" won't be accepted. Every week, I use a randomizer to select the winners. Our team announces the results on our Telegram channel, so make sure to subscribe using the link in the description. In addition to contest updates, I share valuable educational content on our Telegram channel to help you quickly sharpen your skills and develop the mindset needed for professional trading with currency pairs and beyond. Good luck to everyone. And now, here's a little bonus. We're currently seeing the exact scenario highlighted in the signal from the 15-minute timeframe. Sure, the downtrend might have started a bit earlier than anticipated. That's the market for you, where anything can happen. What's even more interesting is the presence of a V-shaped pattern. Given this setup, it's reasonable to expect further downward movement. It might be temporary, but a drop nonetheless seems likely at this point. I also want to point out that our bot is completely free, no subscriptions, no hidden fees, nothing. Just use it and watch your account grow day by day. Remember, all the indicator values in this bot are real and update every 5 minutes, making it an essential tool for any trader. Don't forget to like this video, subscribe to the channel, and I'll see you soon.